Well, we are just about 15 minutes away from the closing bells on Bay Street and Wall Street. Let's head to the TSX for a look at what is moving in the markets and why. Diana Avigdor is joining us now. She's portfolio manager and head of trading at Barometer Capital Management. Diana, good to see you again today. Thank you for joining us.
Hi, Catherine. Thank you for having me.
You know, I know, and maybe we should reiterate for our viewers, you've been bullish. You've stayed the course, recognizing that there's opportunity. And on the back of all of that and everything out there, these markets have grinded higher and your call's been right. So what now?
Well, we are very, very disciplined in how we look at the world, and so our models. I love the fact that we have some indicators to follow, because you're right. There's so much volatility and so many reasons to, particularly the election coming up is our next big catalyst. But our indicators, our long-term indicators, are still positive. Nothing's broken. Our short-term indicators have come into support and have come back up from there. And so our fundamental work goes into those sectors where the breadth is positive and where the thematics work. And so we continue to be fully invested. We are a little bit more overweight US than Canada, probably about 60-40 still, overweight technology. We have raised energy just a little bit through the infrastructure exposure, not so much exploration. Energy is holding in. I know that it's down about 2% today, but it's stabilized somewhat over the last, call it 3 weeks. We're still fully invested.
Diana, let's just talk briefly about the debate last night and the impact that the election could have on the market. It seems though yesterday was a bit of a check-the-box kind of event. Market has not been prepared, many would say, for a Trump victory. And yesterday, I think the takeaway, of course, from everybody seems to be that it was a Clinton win. So is that why we are grinding higher? In other words, it's still pushing out a Clinton victory, and the markets are not at all prepared for a Trump win. If that happens, what happens to the market?
That's a very, very good question. I think that people are not positioned for an election either way, and it's very, very tricky because what the polls are not showing us with the candidates is that there are quite a lot of people out there that will not admit that they will or might elect Trump.
Yeah.
And that has been brought forward to me, and I thought that at the gut level felt very correct. So, but you know, yesterday, to your point, as Clinton looked to be doing better, futures went. I think they rallied about 15 points over the debate, and this morning they checked back a bit for other worries. Such as Europe and energy supply situation.
Diana, let me just stop you there for 1 second, because I think this is a really important topic that we're probably going to keep talking about, which is the European banking situation and the fact that Deutsche Bank has lost billions and billions of dollars in market cap. That, of course, has concerns for investors as to a potential capital raise, dilution of shareholders. Will Merkel step in, even though they say that's not in their mandate too, but we know there could be some systemic risk. In fact, somebody said to me that Deutsche Bank is more powerful from a systemic risk perspective than Lehman was. What do you see and think as we talk about this?
I have seen traders out there saying there is no way that Germany will let Deutsche Bank fail.
Right.
And it is not sure that they're required to raise $14 billion yet. But I think that it highlights an important point. It highlights that it's not just the elections. There's central banks positioning in asset classes, whether it's Deutsche Bank, whether it's Volkswagen, and regulation. So central bank and regulation, whether it's the Japanese management of the yield curve last week, whether it's QE and buying of bonds. Central banks and regulation have a lot to do with where asset classes are going as well. And so where the candidates' narrative fall into what the bigger financial picture is doing, and how, from a positioning perspective, depending on levels we get to, is what's going to impact the initial trade after the election. It could be that you have a Trump victory and a rally in the markets. It's pro-business, lowering of tax rates. So it depends on how the situation in the trade will be set up, according to the original question you had as to how markets might take. It's going to depend on where we're coming at from.
But Diana, with all these uncertainties, you still want to be fully invested. And let me just add to that: would that change if Trump won? And knowing what we hear, his views are of Janet Yellen. If she wasn't going to be the U.S. Federal Reserve Chair any longer, if he won, what would that mean for the interest rate policy? And that, of course, is going to dismantle relationships between so many different sectors and asset classes.
You're so right, but we're going to have to just take the temperature of the patient. At that point, you're going to want to see how the markets are taking it and what balances out with what. Because you're going to have, say, if you have a Trump victory, you might have energy do better, you might have financials do better, maybe on a rate increase, you might have industrials do poorly on trade rhetoric. It's going to depend on which one takes precedence over which. And one more thing, the government infrastructure, any government infrastructure, does not unleash total veto power on the president. He's going to have to get along with others in order to have his policies passed.
That's what they say.
Yeah, we hope, right?
We hope, particularly for us Canadians when it comes to trade. But we have to leave it, right? We have to leave it there, Diana. Thanks so much. Good to see you.
Good to see you too.